like 30 seconds, guys. Whoa, whoa, and all right, you guys ready to go? Whoa, g'day, mate. How are ya? How's your mum? Whoa. All right. Yes, people working from home. What an amazing thought, huh? All right, so it is Monday. Honestly, I thought it was Tuesday just because I've been staring at the charts for so long. I'm like, oh well, yeah, okay. I guess it's Monday. I guess we're just starting the week. Seems strange, but anyways, without any further ado, 3, 2, 1, let's go. Welcome, Daniel. Glad you made it. All right, hey, boom. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Anyways, hey, good to see you. Hey, let me get, can I move this camera around? The camera's not perfect. That's a little better, isn't it? I don't know, I guess maybe I should move this. Just trying to get a little... Yeah, I guess it's a little better. It's, focusing isn't very good. Anyways, good morning. Hi, my name is Wayne. I'm a currency trader just like you. Been doing this for a very long time. This is my... boy, that's really off focus. Hello, me. Focus on me. Anyways. Been doing this a very long time. This ain't my first roller coaster. This ain't my first crash. Been around for a while. And let me tell you, the thing that keeps you alive and keeps you strong is that you're calm and you're focused, you're driven, and you spend your time creating trade plans, not freaking out like everybody else. Do you have an echo? I don't think you should. Hang on, maybe you do. Hang on. How about that? Does that solve that problem? I'm thinking it probably will if it did. Cool. So anyways, get involved, ask questions, and remember you're preparing yourself not just for today's market open, but you're preparing yourself for a career. Okay, definitely not that. Okay, how about that? Whoa, 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 whoa. Whoa, no. Yeah, that should sound farther away. Oh, wait, better. Really? Interesting. So for some reason today it thinks this microphone is a webcam. Yeah. In sooth, I know not why I am so sad. Yeah, it must be that one. So today it's called Webcam Source. Okay. Thank you, technology. It's a bizarro world. Yeah. So get involved, ask questions, and please treat everybody in the chat with dignity and respect. And if you appreciate me coming to your life every single day, if you appreciate these webinars, if you appreciate the community that we have here at Forex.Today, please express that by doing a few, if not all of the following. Number one, visit tradersway.com, our sponsor, and thank them by opening up a demo account. Okay, fill out the form, download MT4, test the execution speed, check the swaps, check the spreads. You're going to be happy. Practice for a few months, for a few years on their demo accounts. And then when you feel confident in trading real money, perhaps they've earned your loyalty and respect. Two, to show your enthusiasm for our community, would you please do things like subscribe, like, and leaving comments on the videos? Because that tells YouTube, hey, this is quality content, me likey. And it's important. Okay? Okay? And all that. So cool. Now we have a question here. What about all these interest rate cuts? Well, everybody's cutting. And you'll notice when you get things like pseudo-coordinated and then absolutely coordinated cuts, what happens is you make money cheap in your economy to the market participants in your economy. So it's cheaper to borrow and stuff, and that's good to help keep the economy afloat. But if there's some sort of coordination, if everyone is cutting at the same time, then no country benefits from a lower valued currency than all the others. So if one country cut and everyone kept them the same, that currency would lose value. So that would spur the economy, but then they would have an unfair advantage against other countries. Okay? So if they all cut, the local economy benefits, but sort of the macro competitiveness actually hasn't changed at all. Okay? So it's sort of micro versus macro. Micro, it helps the local economy. Macro does not give them an unfair advantage by manipulating the currency. Does that make sense? Hope so. You may notice that the charts, although a little ugly looking, are a little bit bigger today. Perhaps a little bit easier to see today. You notice it's a little wider today and a little taller. Just slightly more, maybe a third of a chart wider. So anyways, yeah, so hopefully that helps. Okay, hopefully that helps. Let's start here and just kind of work our way around. Let me get out my drawing tool. It's really weird because I really do feel like it's not a Monday. I feel like we're well into the week. Right, well, On says, now what's going to happen with the Fed cutting to zero? Well, you already saw it a couple of weeks ago with the euro strength. Does anyone want to venture to guess what that meant? Soon as we realized, or soon as the rest of the world realized we were going to zero, what happened to the euro dollar? Well, the interesting thing is what actually happened was that Europeans that were holding US dollar carry trades, because remember, you could pick up a couple of percent in the United States, and then you were earning negative in Europe, so it was pretty decent carry. So as soon as people said, oh my God, not only are they cutting, they're going to keep cutting and cutting to zero. So that killed the carry trade because, well, if there's no carry, there's no carry trade. And that means the Europeans sold the dollar and the euro rallied. Now, do you remember talking about that dollar weakness not lasting very long because of that? Do you guys remember the speech where I said that you stick to your bias and you're not in the spotlight now, but and I think we even looked at Commitment to Traders report, and I'm like, look, what this indicates is this has happened, but when it stops happening, then there may be a presumption, if you will, of the trend, the longer term trend returning. Okay? I think that is kind of what happened. Okay. So anyways, I did something. Maybe I'll show you guys. I did something this weekend. Will it let me? Yeah. Okay. So here I am in the office. I don't know how much. Anyway, so this is just above me. Here's my screen. You see how big the screen is? All right, cool. And look what I've added here above me. Like, here we go. Here's one. All right, Adam Smith's Wealth of the Nations. So this is just a small part of the Harvard Yard. Yeah. And so I got the whole one. So anyways, look at the condition they're in for being over 100 years old. It's pretty cool. Most of them are still, most of them are still wrapped in museum quality paper. And there's more than that too. So anyways, neat though, right? And then of course, you got to have the bullhorns. And the globe. And that thing. So anyways, interesting, huh? Oh, don't go down there, honey. Hang on, I guess I gotta clamp this a little better. Oh, wow, extreme close-up. Things appear larger than, there we go. All right, cool. So those are first edition Harvard Yard books. First edition 1907 or something like that. I can't remember. Cool, huh? So again, if you're not familiar with the Harvard Yard, the president of Harvard, it might have been Eliot, back in 1907, 1908, something like that. Actually, it's more like 1905. He did a speech and he's like, you could educate any man in a stack of books no longer than 5 feet or something, right? And a publisher from New York City said, really? Is that true? So they spent a couple of years compiling the most important literature ever in the history of man in the English speaking, in the English speaking world, of course. And they compiled those books. So if you're a Harvard man, you've read The Wealth of Nations by Adam Smith, for sure. So anyways, when we get to the book club, we'll read The Wealth of Nations together. All right, cool. So anyways, let's get on with this. Okay. And if you remember, just a few weeks ago, I introduced you to this Norway kroner, or crown, or krone, or krona, whatever you call it. And it was because oil was falling. You guys remember that, hopefully? And so what I introduced to you is that would make this currency pair go up. We've never really talked about it. It's not something, I only look at this maybe a couple of times a year. So anyways, I threw this up there just in the beginning of this move. And so I don't know if you've been following it or not. Okay, isn't that interesting? So this up means oil down. Now notice that even as the world was freaking out, let's say if I can squeeze this in here, I guess we really can't, it's difficult. But look at how well it respects the pivots. Even under this, extreme duress, these pivots were still respected. This is R2, this is R3. Now we're up here nomad's land, but still, I find it interesting that even though there's so much emotion in the market, there are logical prices that continue to be respected. So if you ever find yourself emotional about the markets, you should back yourself out and find the levels that will be respected, right? Cool. All right, so we got further continuation to the downside. I think this is set for bearish pivots down. Okay. So I need to go into a smaller time frame. Okay. So what was the plan we created last week for pound yen? Well, most people know that this looks like it's bearish. I mean, let's go all the way out here. It's bearish, right? It's still bearish. It's bearish, right? All right. So today, I guess we could even do it this close. If you were a bear, the market opened down. This is your sell zone that we knew last week. Not perfect, but it's tradable. Down, 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 up, up. Okay. There's your London, Asia fade, London front run. Second chance. Okay. That's day trading. Okay. So there's a gap down, another way of looking at it. A gap down. So you should fill gap and then continue mission. Okay. Yeah, and that's the problem, right? Hang on. Let's back this out a little bit. I have the target at 29.60, so you might as well make 29.50. So there's one more hurrah there. Okay? One more hurrah. Target is right here. Down, 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 three-wave correction, right? It's another way of looking at it. So here's the more macro view that lasted, the whole week. It's not that macro, but anyways, right? And then there's this other one where here you sell, down, 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 up, up. This was the sell zone, right? Down, 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 right? Look at all this move. Then we got some consolidation, okay? Which means now we're back onto this blue area. All that's happened was down, right? Series of lower lows, lower highs, all the way here. Then consolidation. Then a three-wave correction or whatever kind of correction. So that all we've done now is, let's say, a 382 of this high to this low. You understand? So now it continues as it should, with creating a lower high. But then going into the smaller time frames, break out of the consolidation, pull back from the consolidation, lower low, lower high, lower low. And then tomorrow is saying, yeah, when we get near this 131 area, there'd be a new down. Okay? Be careful there. We're on the psych level of 130.000. That can mess everything. Okay? So I'm trying to show you what we call fractal geometry. Okay? So we know a trend, let's say a downtrend. So all these fractals are generally parts of downtrends. So we need a lower low, lower high, lower low, lower high, lower low. That's the pattern. And so you get that pattern here. Okay? And then, of course, you get the pattern in the smaller time frames. Okay. And it's the same pattern repeated, because I can tell you this blue had the same pattern. So when we're looking at the blue area, we're just looking at this part, right? But I can tell you there's one above it as well. And you rinse and repeat. Eventually this higher time frame will consolidate. You'll get some sort of correction, and then maybe the trend continues. Okay? Happens on all time frames. Take a look at the next one. So that's Beast, that's Noki. Euro dollar. Let's do it. Let's do it. All right. Pay attention here, because we have a lower high, 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 a higher high. So this could be a change in trend. Delta. This could be a change in trend, especially off of consolidation. You notice that the trend lines are saying this. So at least back off your aggressiveness on selling this, okay? So if you remember what we just did on Beast, there could be a situation where we have this. Okay? It could even make another higher high before it makes a higher low. Because the way that you handle this is you measure the low from the consolidation, and let's say this was the previous high. We actually don't know. I'd have to back out. But at some point, there's going to be a 382 to 618 Fibonacci retracement, right? At some point. Okay. So this could be the top here. It could go higher. Okay. So you got to look at it more from a macro sell point of view. Let's see if I have any tools that would help with that. Template. And we can go to swing trading bearish weekly. And there you go. So this is the actual top. We were zoomed in a little too much last time. You can use Fibonacci. In that case, you're going to mark this and say 382, 50%, or 618. We call that a sweet spot. Did I lose you guys? Seems very quiet all of a sudden. Okay. So we call that a sweet spot. So if you're a bear, you're going to look for, I would say, this double bottom. And then honestly, I think it could easily do this first. Okay. Okay. Doesn't feel like it would do this. It's just not good consolidation, because that's basically down, sideways, down. And it only does that if you're playing off the 4-hour daily 21. And it just doesn't feel like, or doesn't seem like that when you look at the other time frames. I mean, you could argue this, but it's still, I like to see proper consolidation. Okay. Hope says, why is gold selling? Well, maybe it's people buying dollar. You also have to understand that gold is expensive to hold. It's expensive to buy. It's expensive to lift if you're going to bring it from one country to a different part of the world. And then you got to do assay reports and smelting, and you got to import paperwork and export paperwork and the actual paying for the security. And then once you do all the assay reports and you pay in your cash to now hold this physical asset, then you got to move it to your warehouse or to your vault, for lack of a better word, for storage. And that has costs associated with it. So gold is actually a very expensive asset to hold. So you better have good reasons to be buying it. Okay. So anyways, here's that WTI. This is how I taught you to short. These were all our sell zones. This is just like the other pairs we just talked about, where we had a lower low, lower high. Okay, that's about a 50%. Okay, this is a monthly sell. This is a weekly sell. This is a Fibonacci sell. There's a psych level in there. So I drew all these lines, and I said to you somewhere here, if you were a bear, you would sell, aka the sweet spot. Well, it dropped from 49 to 29. Cool. What's happened now? Down, 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 up, up, back to the 4-hour 21. Okay. This is straight out of the swing trading course. You should know that all of this. And it kicks, and we're back down to 29. Okay, commodities are coming off. Okay, not only are we in a risk-off world, but we're also in a global economic slowdown. Okay. Hope is saying it doesn't have to do with stocks and bonds being lower too. Well, it's not stocks and bonds. It's risk on or risk off. It's just money flow. Now, there can be a situation where assets are coming down because other assets are coming down. That's not really a normal thing. It happens maybe in situations like this, but I wouldn't make too big of a deal of it yet. And if you don't understand what I mean, just think of it this way. Let's say you're heavily invested into, oh, I don't know, the stock market, and you've lost a ton of money, 25% of your net worth in a matter of a month. Does that force you to sell your yellow Lamborghini that you never drive and cost you $4,000 a month? Or do you say, you know what, in times like this, I think I'll dump my Lambo. I don't need the expenses and I'll convert it to cash. Well, that can happen in other assets. You might dump gold because you need cash. You might sell your house. You might need cash. You might sell your vacation home, right? Because you need cash. And that happens when you lose money and you don't have any other way of making income, which is, I guess, most people, right? Did you guys get my video I did yesterday morning during sunrise? We kind of talked about that a little bit, huh? Sure trade, or no, someone else. Wade says, hey, Wayne, are banks going to lend now? Absolutely. Yeah. See, the United States right now still is not in panic mode per se. This is still a virus, not a crisis of financial markets. Now that might change, but you have to understand where we were in 2008. We were at 10% unemployment and credit markets were completely frozen. Well, we don't have any unemployment right now. Now, we're going to have a higher unemployment level. Is it going to be 10%? No, I don't think so. Is this a credit crisis where banks are failing and AIG is going out of business and all this kind of stuff? No, it's not the same. And in fact, if this is a virus, if you look at let's look at what we know. Okay. Our good friends in China were clobbered in January with what we knew as the coronavirus. And it's largely under control now in China. And life is returning. Is there anyone in China or Hong Kong that can confirm this right now? Where's my Hong Kong brothers and sisters? That Hong Kong, for example, was clobbered in January. Things are not back to usual, but we're getting there. Would that be a fair assessment of Hong Kong? UK Kenny says yes. Is that right? Things were horrible. I mean, you had your riots and stuff all before that. Okay? So here's my thought then. Because we have boots on our ground, our team is so diverse and deep that we can just ask our community here at Forex.Today, like, hey, Hong Kong, what's life like? And I think from asking those questions, right, that we could say 100 days from now, let's say China went through basically a 100-day cycle, 100 days from now, maybe economically, the U.S. economy will have bottomed from the suffering of the virus attack on the economy. So the economy would have bottomed and stabilized. Okay? If that's true, then by the time we get there, I should already have purchased what I want to buy. And I told you guys 2 weeks ago, right? You remember this? 2 weeks ago, I told you that I'm getting ready to buy. And 3 or 4 weeks ago, I told you to start building your prep stash. Right? Like, so now, by the time, so I'm thinking in 100 days, the worst will be over, things will stabilize, and I will have already purchased the stock market, for example. Okay? And you might get something like, in June, the Fed cuts interest rates to 0, and the stock market rallies. Okay, why? Because if you're investing in the stock market, you're not investing in today. You're investing into 6 months from now. So there's my thought process, guys. There's my thought process. So if you have your own personal liquidity problems because you used to have a job and now you don't, well, you might want to sell some assets to raise cash. That's what liquidity is, cash. Okay? So question going back to oil, is it even feasible for oil to go down? All right. Let's talk about this one more time. This is not an equilibrium price. So here's where we are now. This is not a demand-supply equilibrium. Okay? Saudi Arabia is at war with its global competition. It's not speculative at all. This is a war. Okay? That's what caused this gap. This is Saudi Arabia battling the Russians over here and the Americans over here. Saudi Arabia understands that there's a global economic crisis, so oil prices should fall. And the response to this right now is Saudi Arabia is producing more. There's less demand than normal, so Saudi Arabia is producing more oil. So in fact, they're producing as much oil as they possibly can. They've increased production to maximum levels, and on top of that, they're taking oil out of storage and they're dumping it on the market to lower it and lower it and lower it, with the purpose of bankrupting the Russians, the purpose of bankrupting American frackers. And so for a year or two or whatever it is, Saudi Arabia won't make much money. But the thing is, their cost per barrel is $13. So as far as I'm concerned, this could go to $13. Okay? But you can't say, you can't put this and just trade it like pure technical analysis, or whoever made the comment of like, oh, well, do you think this is feasible about going lower? I'm like, oh my God, this isn't supply and demand stuff. This could go to zero at the rate we're going because it's purposely being pushed down. This is a strategy, and this is not harmony. This is a strategic war, and you need to think about that. Well, Iran doesn't need help being taken down, John. But yeah, it ain't going to help anybody else either. Okay? Oh, no, it's not a holdup. We need to clarify these things. Okay? We need to clarify so that everybody knows. So, yeah, there's no reason to be sorry. So anyways, if you're starving for cash, you could dump some gold for sure. But here's how I look at a lot of things. I guess we can take gold, we could take oil, I guess gold, or how about the stock market? Let's do this. How much percentage-wise did the S&P 500 go up last year? How much did the S&P 500 percentage-wise go up last year? How much did it appreciate? So, 30 something, right? And how much are we down right now from the top? How much has the virus pulled us down in the last month or something? Okay? 25 plus, let's say. So, how desperate should we all be right now? How panicked should we be? Yeah. So people that bought last year, and we talked about it over and over and over again. I even said that funds were going to be forced out of companies like Apple and not buy back. Right? Do you guys remember all those conversations about rebalancing portfolios? And like you bought Apple at 800 and now it's 1500. I don't even know. I don't even follow the price. Right, but it's way up. You doubled your money on Apple, so now you got to get out of it, and you don't buy it back at the top, right? So it's just, this is all part of the maturity of the market. It was going to happen at some point. Of course, the virus was the catalyst and is devastating economically, but this too shall pass is what I'm looking at. And I think there will be somewhat of a recovery. I still think Trump's going to win and that there'll be a rally there. And then I think my next question to myself is the COVID-19 crisis, is this the recession I've been waiting for? Or is it just a bump along the road to the next recession? But a recession is needed. Right on, Joe. Right? Like, so these are the big questions I'm asking. Is this going to replace the recession of, let's say, 2021, 2022? Right? Has this just moved it? Is this it? Have we moved this to 2020? Are we good? So that doesn't get me. Let's put it this way. That's going to be my problem next year. Right? This is why I say those that get caught up staring at their charts on a 15-minute block only, they're missing the bigger picture. So I'm already preparing and thinking about if this is the big dip we've been worried about, and the COVID-19 made it early, then how am I going to play out 2021, 2022? Because I still think we need a real estate recession. And it's not a big one because real estate's not up that much, right? I think my house, if I were to guess, I think it's up about 50% in 10 years. You know, I don't live in California where it goes up 1,000%. I mean, it's good. It's good money. So what does that mean for me? You know, our price is going to come down. Our, you know, like for example, here's how it might get interesting. Money up until a few weeks ago, money was free. The economy was awesome, booming. We're in boom times. And stupid real estate developers do what stupid real estate developers do, and they develop stupid real estate ideas way late in the game, which means they pay way too much for the land, they pay way too much for the workers, they pay way too much for the wood and the pipes and the nails and everything that goes into building a house, right? And they bring product to market that isn't actually needed, is overpriced. Oh, and they paid too much for their financing, right? And now that let's say the next year is not going to be a good year. Let's just say it's not a good year. All that inventory that they've spent the last 18 months paying way too much to develop, all that inventory will come onto the market, let's say next year, 2021, or late 2020. And let's say unemployment will go from 3 to 6. Okay? And they won't have demand for their dumb property that they paid too much for because they developed it too late in the game. And by that I mean if there's a 13-year cycle, it's in like year 11 they're developing this property. And everything looks good because the economy is booming, everybody's rich, but that's the problem. You don't, right? That there's a 2-year lag, right? So the real estate recession may be more like 2021, 2022. I guess that's supposed to be a 2. And maybe we have the stock market cooling off period where it comes down and we recover for the next year or two. And then we have another stumbling block in the second year of Trump's second term. And we have another slowdown. Right? So now there's a stock market drop, and a big one. The real estate market, let's say, drops, but it's more like inventory going up and prices coming down, of course, financing very, very cheap. And we have a bit of a pullback there as unemployment goes up. Does that make sense? Does everyone agree with that? Like, does everyone agree unemployment rate will go up and it will be more than 3%? Let's say in 12 months, in the next 12 months, will the unemployment rate be higher than 3%? How many people would say yes? Then type this in. Instead of saying yes, type in what you believe the unemployment rate in the United States will be 1 year from now. Okay? And as we go from 3 to 4 to 4.5 to 5, can you see how that would negatively impact things like new home sales, existing home sales, occupancy rates, Well, those are big ones, right? Because many Americans will lose their jobs. They will have no household effect, right? It'll be a negative household effect. People will feel poor. They will be poor. And any real estate that, let's say, started in the last year is still not done. You understand? Like, soon as it hits 5%, a lot of real estate that started to be developed 2 years ago, no, let's say not 2 years ago, 1 year ago, will come online next year. And the unemployment rate in the United States would have doubled. You understand? Like, there's a lag with this whole thing. So, so maybe when that micro economy, if you will, if the real estate market drops in 2021, maybe I'll be a buyer in 2022. Okay? Again, to me, it's just a trade. Okay? Just another trade. Sort of like buying your prepper stash before the panic. It's cheap. It's easy. Okay? About a week ago, before the panic, I got 3 months of insulin because I'm a diabetic. I bet you it's not that easy to do now. That's cool. Well, if any of you guys are accredited investors, which means you have a household income higher than 300,000, I think that's the line. Double check. But anyways, if you know you're an accredited investor and you wanted to put some money together to do some real estate deals, let me know. All right. And Bitcoin is just Bitcoin. Yeah. Off the face of the earth. You're welcome. We've had this down since 10,000. Jim's got it. Yeah, because if you think about it, if, let's say 10 people throw in 500,000. So you got 5 million, which means you could leverage about 15 million. So you could probably buy one nice property. Buy one nice property. But the thing is, if you bought a $15 million property, the idea is, right now it's probably a $20 million property, right? So in 6 months, we buy it for 15, get it financed for super cheap, and sit on the income. Well, it's not, see, Jim, it's the income that I'm interested in. So I want the renters to pay the mortgage and put some pocket money in back to the investors. So here's the idea, Jim. Like after 10 years, it's actually less than that. But let's say in 10 years, Jim, we all threw the money in, we bought this place. In less than 10 years, you get all your money back. Whatever you ponied up, right? You get that back. And that's just through the income. So at that point, we still have further income, but at least you're net positive, right? Like all the money you took out of your pocket is back into your pocket 6% of time, 6% a year, right? So at the end, let's say in roughly 10 years, you got all that money in your pocket or whatever, right? So then our choice would be, do we hold it another 10 years, keep putting money in your pocket through income, right? Or has the property appreciated enough to sell it? Like, let's say it doubled. Oh, well, then you sell it and we split it all up, right? The bank always gets their money. But then, of course, what I'd probably rather do is then use the first property, leverage it, and get a second property, right? So anyways. It's just money. It's just another trade, just an asset. All right, so let's take a look at some Swissies, I suppose. Yeah, maybe. I mean, my general theory always is never sell real estate. You never sell it. You buy it, the renters pay for everything, and it always goes up. Not in the short run, but imagine you bought a skyscraper and 100 years from now, you know what I mean? How it was paid off in 20 years, so you had 80 years of just free cash flow, you know? Meanwhile, you've leveraged it 6 or 7 times, so now you own 20 buildings, right? So anyways, that's my thought. Anyways, so if you got money, if you got friends with money, you got family with money, you're right, you got a group of people with money, we should probably talk about throwing something together. All right, let's start with the Kiwi because I'm on this one, as you guys know. So let's get off the 4 hour. Let's do a 1 hour, and I could drag this down quite a bit. So let's do this. Okay. Let's do this. I can lock in right now. That's 750 pips. No, that's 700 pips. Sorry, 700 pips. So that's not bad. Yeah, okay, so Pro Trader says the swap on this is negative. So let me address that in a second. Now I can move this one and lock in 750 pips. What do you guys think about that? Remember, I've been trying to teach you to let your winners run. Have you guys enjoyed the process of locking in 100 pips, then locking in 200 pips, then locking in 300, 400, 500, 600, now 700 pips? Has that opened a door mentally to anybody where you just never thought that kind of stuff would happen, or that you never tried, or did that open anything for anybody? Just this idea of, oh my God, really? Any breakthroughs? Just Pro Trader? So you guys do that on a regular basis? You're like, oh yeah, that's easy. Good job, Pete. Peter's took 7 hun off the Euro USD. Right on. All right, so let's go to, was it Pro Trader? Let's do Pro Trader's question here. So here's these 3 trades. I have $300 invested, and I'm up $2,300. That's not bad, huh? I turned $300 into $2,300. All right, but here's the point. I have lost $62 in swap on this one, $55 on this one, but I'm up 900 pips and 800 pips. Okay? And by the way, this 900 pips includes the negative 62. So I'm already up from the actual entry 950 pips. Okay? So, Pro Trader, should I walk away from a trend trade because it cost me 20 cents a day? It's not even that. Right? Right. So that's all I'm saying, right? This is not a carry trade. This is a position trade. Okay? This is a swing trade on steroids. Okay? But you have to understand too, every trade originates as a scalp, then an intraday, then a day trade, then a swing trade, right? But the plan was always the swing. The plan was, sell high for all to see. All right, so the plan wasn't too complicated. Where's my drawing tool? We had it set like this. Okay. This is what it looked like back then. Breakout, pull back, gone. Yeah, that's right. Anthony's got it. It's not that terribly smart or ridiculous or special or even good. It's just more of that institutional mindset. Absolutely. I agree with that. And now the other interesting thing about it is, we talk about all of this for days, if not weeks, and many people miss it. Right? Many people miss it. And to me, that's why I always ask you guys, you should, talk to your internal self and ask ask why'd you miss it, right? And I don't think it's a bad thing, right? I don't think it's a bad thing. And so that's why asking yourself is a good thing. Okay. So anyways, check that out. I think we would have had it marked up something like this. Down, 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 down. Up 50%. Okay. Down, 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 down. Cool. Now, obviously, this benefited from the Corona, move. But we are in this a month and a half before Corona hit the United States. In fact, I'm entering this before it even hit China. So this is entered because I told you here in August. That's actually right. So let's follow this up. In the third week of August, we had Swissy pairs going up. So this is the third week. How many people agree with that? In the third week of August, we had all Swissy pairs going up. Is that a yes or is that a no? Okay. Great. So that's the third week of August. No later than the January 1st, we had all Swissy pairs going down. Yes or no? So I had forgotten, but the basis of this trade was I told you it's going to happen. Then in this area here, because remember I got out 3 weeks early, I said, I'm going to do it. 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 I said, you're going to log in 3rd, 4th, 5th week of January. You're still on holiday. You're all suntanned because you went to the Caribbean and you're already late. I said, I'm going to do it. You watch. We're going to come back in the very first webinar, which was probably January 2nd or something. I'm like, I'm already going to be short this. Anybody remember that? Say aye. If anyone remembers that conversation, say aye. This is important to your education, guys, to show you planning can be done weeks and weeks and weeks and weeks in advance. Okay? So it's not about me being right. I'm reinforcing that on the way down, I told you that it was going to consolidate. And then in the consolidation, I said it was going to go up. And then in the up, I said it was going to come down, right? And here we are. It's very, very much plannable. And if you can plan it, you can trade it. Okay? Because remember, in Forex, there's no right or wrong. There just is. There just is. Okay? Okay? So there just is, and then what are you going to do next is most important, right? So anyways, that one thought process is now up, locked in 1,500 pips. Cool. Okay. Cool. Okay. So here's the first of the year. Okay. Is that right? Prince Philip says, well, right now when prices are extreme, well, I'm not going to say that. I don't know if they're extreme or not, but I'll go with it. Is it too late, or is it better to stay out? Or is it better to stay out? Well, let's look at it this way. There was a time when it was plannable. There was a time when we had our normal seasonality, where I can say in normal markets it does this, in normal markets it does that. Okay? What people do now that everything has happened, I don't think you can stay out because you have to do your job. And so your job, if you're trading your own money, is make money. And your job, if you're trading other people's money, is to prepare them and explore and seek out and find opportunity and then manage the risk for them. So staying out is never really a true option, really. I mean, it's staying out and waiting are two different things, right? Staying out means you're not even at the poker table anymore. Throwing your cards down 5 hands in a row is not out of the game. You're just waiting for a good hand, right? It's just, I just worry about the big pictures being missed. Like, how could you miss the big, obvious, fundamental, huge, not tsunami, but tidal wave in front of you, right? And now that it's happened, we have to deal with the now. And as we started like this conversation today, I'm already kind of working out what's going to happen next. I'm not necessarily worried about today. You could have shorted when the market opened 12 hours ago and you would have done fine. That's what you're supposed to be doing. So right now we're supposed to be planning out tomorrow, and then we got Fed cuts and stuff coming up, and and other things coming up, and what's going to happen between now and June 1st is really what I'm thinking. And then my next thought process, from the June Fed meeting till the September Fed meeting, what is going to happen. And then from the September to the December Fed meeting, I'm planning that out. On top of that, we have a political election. So I'm pondering the timing of market moves based on that as well. So, right, but right now, is it too late or is it better to stay out? Well, I'm not that concerned about now. All those trades have been placed and all my analysis has been done and my bias is set. And we're very late in that game too. So, like I told you a week ago or even 2 weeks ago, you should create a list of 10 stocks you want to own that you couldn't buy before because they were too expensive. See, like, I'm preparing for the near future. There's just another trade now, right? If this is risk off, at some point, risk on will return because the pricing will attract the risk takers. If some dude bought, let's say, Apple stock 6 weeks ago, he's, I mean, so late in that game. Why would you buy Apple at $10,000 or whatever the stock is? It's trading at like 27 times earnings or something. You have to be mentally deranged to say, yeah, I'm cool with buying at $10,000 a share because it's going to go up to 20,000. There's always a fool, right? Apple's a great company. It makes great products. It has great cash flow. But too much is too much. But someone always comes in and buys at the top. Why? I don't know why they do it, but there's always somebody that does it. So now, after 3 weeks of just crashing prices, what does that person need to do? They need to get out. I might look at it and say, well, you know, Apple's down 22%. Maybe I pick some up. Done. I'm helping the dude out. Same way I'm going to help the real estate developers out. I'm like, oh man, beautiful development. You really did some nice things here. Too bad you paid too much for the land. It's really too bad that you paid too much for the material. It's really too bad you paid too much for your labor. It's really too bad you paid too much for your financing. But my investors and I are going to help you out. So we're going to cut you a check. You have 3 minutes to cry, and then you can give me an answer. But at least you don't go bankrupt, right? I don't know. But there's this ebb and flow. This is what we do every day, right? When you buy something, there's a seller on the other side. When you're buying Apple stock, there's a seller on the other side, okay? Think of it this way. The vast majority of institutional investors bought Apple 8 years ago. They bought the S&P 500 10 years ago. They bought whatever they own a decade ago. They didn't buy Apple at 27 times earnings. Makes no sense whatsoever, right? So that's sort of the difference. So whatever fool bought it at the top is going to pay the penalty. And the smart money like you and I, we're going to buy at a discount. And we're going to help people out. Okay? And there's real value to being able to do this analysis. It's not just trading, right? So, for example, the cost of putting in a swimming pool in my city has doubled in 10 years. Okay? Doubled. But people are pulling money out of their house because the value of their house went up 50%, and they have a really good job, and they have income, and money is cheap. So the swimming pool company is like, oh, don't worry about it. You just finance it. Okay? But the problem is you can't get the pool company to come out and put a pool at your house because you're on a waiting list. There's 6 more pools, right, to put in. Well, I have a feeling if I call people 1 year from now and say, yeah, I'm thinking about putting in a pool, A, they're going to be eager, right? So I'll get good prices. B, they'll show up and do it quickly, right? And A, B, am I on C, I guess? C, I'll pay half price. $100,000 pool cost me 50 or 60. Done. Because no one will be putting in pools when they lost their job. No one's putting in pools when the value of their house is falling. But that's when you're supposed to put in a pool. Because you're a Forex trader. Your neighbors lose their jobs? Well, then you better take advantage of the fact that you have a laptop and that's your job. Right? This is what I use for my commute. My mouse. Okay? It's a blessing. Okay? So what are we going to do now? Well, here's what I've always told you. The trend will continue forever and ever 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 until it reverses. So right now, I'm not betting against anything. This is falling. It will continue to fall. It's risk off until the prices are so low, risk takers show up. Or the pain is so much that the risk averse cannot stand it any longer. Okay? And there will be a change of ownership, a transfer of wealth. So are we there today? I look at these charts and say, no, we're not there today. This still looks bearish to me. It'll be bearish tomorrow. It'll be bearish next week. It'll be bearish next month until it stops being bearish. And how will I know that? Well, first of all, I have a fundamental belief that in the next 100 days, the market will recover. Not the economy, but the market. The economy will start to heal in 100 days. But by then, I've already bought everything. Okay? So there's my fundamental point of view. The difference between the economy and the market. And now I use something called technical analysis to confirm or deny my bias. So in the next 100 days, we will see something to the effect of this. Let's say, And if so, I'm going to fire for effect here and here, and I'm long balling it for quite some time. Well, Prince, my life is structured more on swing trading and position trading and carry trading. Since I'm a businessman, I'm a husband, I'm a father, and I'm a full-time college student. So I'm much more swing trading than day trading, or not even. No, I'm a day trader too. So to me, day trading is a form of swing trading. But anyways. As far as intraday trading, I do a lot less than that, less now than I used to. But let's back up. If you want me to answer, Prince says, how many hours do you spend at your day? Well, I spend a lot of hours per day at my desk, not pure trading like I used to. So if you back up, let's say before Harvard, so 6 years ago, So let's say for 10 years straight, I would have worked somewhere between 10 and 16 hours a day. HHHH, you're going to have to do your own analysis on that. They all have their own cycles. Okay. Jim remembers when I first started. Yeah. So, yeah, sometimes it would be, I've done things like trade for like 2.5 days without leaving my desk. So, but most of the time, it's all the time. And also, you have to understand, because I work at home, I've had offices over the years too, and skyscrapers and stuff like that. But it's too nice to work at home, so I just work at home. But like my charts are always up. I'm always looking. at the charts. Always. Like I'm always looking at the charts. Always. So even if I'm not at my desk, I see everything always. And then I also time things. So, like, for example, at 7 o'clock, I start trading gold. At 7:45, I look at oil. At 8 o'clock, I start preparing for 8:30 news flow. At 8:50, I start front running the S&P 500. If there's news at 10, then there's a slowdown between 10:10 and 10:13. And then around 10:13, I'll do a swing, not really a swing, sort of intraday swing into the London close. And then probably, well, that sort of last few hours of London close will maybe get something. Then there's sort of New York lunch where you just take a break. Then it used to be at 1:30 pigs and cows closed, and at 2 oil would close and stuff like that. Right? Like literally trading would stop at 1:30 or 2. But that doesn't exist anymore. But I used to trade the 1:30 close on oil. It was really an amazing thing. Every day I would trade that. And then that sort of floats, and then there's the New York close, which, depending on market conditions and time of year, often puts in some nice trades. And then, you kind of take a bit of a break, I suppose. And then Asia is really cool. So if there's Australian news, like Aussie jobs report, I'll trade that. And then you got the 8 o'clock open in the ASX opens, all the banks in Korea open, all of the banks in Japan open. So you have that, and then so you get that spike, or maybe trade if there's news. And then around 9 o'clock, you start front running Shanghai. And then by 10:15, 10:30, I start dropping trades on the London Open. And then I go to bed. That would be a typical day. Oh, that's funny, Picari. Yeah, dude, I'm 46 years old. I'm not a grandpa yet. But anyways, how about that? Carlos says, have you seen the documentary Floored? Well, let me give you a story. I was invited to the premiere of that documentary in Las Vegas. Okay? So I had a special VIP ticket and everything. And so I think that was like at 8 o'clock at night or something. And I did a speech in I think it was a Traders Expo or something like that. That late afternoon, I think I was the last speaker. So I must have gone on stage around 4 o'clock, which in Vegas I think is prime time because people don't want to show up at 6 in the morning, although they've done it for me. But so anyway, so here I am, I'm on stage. My job that I committed to is to walk on stage, talk for an hour, right? And then I was going to go get some dinner and then take my VIP ticket and go watch the grand premiere opening of a movie. Sounds pretty like legit day, right? Fly into Vegas, walk on stage, do an hour speech, grab a steak somewhere, and then go to the premiere of a movie with your VIP ticket. Like, that's a legitimate Vegas day, right? So here's how it went down. I get up on stage, I talk for an hour, and when I'm done, the whole expo is over, nobody wants to leave. So I'm like, I will stay here and I will answer everyone's question. I said, I got really nothing to do for 2 hours. So I will answer everyone's question, right? And I just got the mic. So I finished speaking for an hour and I'm like, I'll just keep talking. I'll answer your questions. And people are like, oh my God. So, right? So like 300 people stayed, and after an hour, there was 200 people. And after another hour, it was down to like 30 people. So I got off stage, turned the microphone off, and we sat right on the floor, chairs. We put chairs in a circle, and I continued answering questions. And I missed the movie premiere because apparently I sat there and I answered people's questions for 3 hours. Just sat with currency traders talking. And I missed it. So no, I have not seen Floored, but yes, I did have a VIP ticket to the premiere. Yeah, but I missed it. How cool is that though, huh? So, I went and got a steak, went to bed. Yeah, I hope so, Daniel. Hope so. Yeah, hey, Jean. But that's how it goes. So, by the way, my trip to New York, just the other day, I guess last week, or was it this week? No, last week. The recent trip to New York, meeting all the the boot campers. Wow, did we have a good time. I thought that was great. I'll give you an example. We had security at the front door, and I went down there and I gave them a list. Here's the 7 people who are going to meet, and I said, you know what, let's just meet up on the roof. So I gave the security. I said, if you could just tell them I'm going to be up on the roof. So then I go up, and this is 20 minutes before people are arriving. I get upstairs, I'm on the roof, and they just open the bar. And I talk to the staff. I'm like, you know what? I'm going to buy appetizers for everyone and cocktails for everyone. And we're just going to be outside for maybe 45 minutes. And then we're going to go somewhere else. Can you just make sure everyone's taken care of? And of course, at the club, they don't accept cash. They don't accept credit cards. It goes on my bill, right? So whatever. So I just take care of everyone, I tell them. And I sign for it up front. Like just whatever gets put on there, I'll take care of. And so I start meeting people. And we're outside, and we got the whole patio to ourselves, and I think we were out there for close to 2 hours, 2.5 hours or something, just sitting up on top of the Harvard Club, view outside on the rooftop, just talking. And then I'm like, all right. So then I grab an Uber. So I got one of those big XL SUVs. Loaded everybody into the SUV, headed uptown, went into the Cigar Club, and we're there for 3 hours, just talking, just a group of traders. Had a really good time. So, the people here in the chat with you right now are real people, and they're cool just like you. Everyone's got their story. Everyone's got their past, everyone's got their hopes for the future, but they're really cool people. And I've been doing this for 15 years. It always seems to turn out that, or it always has turned out that way, that everyone is like you. They're working hard, they have their needs, they have their dreams, they have their hiccups, they have their fears. They're just like you. Yeah, and it's cool. It's cool to talk it out. Yeah, Sophie's great too. Where I'm like, hey, Sophie, this is your opportunity. You can get the cheap house cigar and have a cigar. You're like, yeah, hung out with the boys and had a cigar. Or you can get the Monte Cristo #2. What I consider the best cigar, best all-around cigar, best quality cigar, best. And I said, you can talk to any seasoned cigar smoker and say, I smoked I don't often smoke cigars, but when I do smoke cigars, I prefer the Monte Cristo #2, right? And she's like, that's what I want. So ordered it from the menu. Boom. Like a boss. So anyways, that's how you roll, right? So yeah. So anyways, we had a great time. So it just reminded me of like missing that movie premiere. I wouldn't have done it if I thought that group of people were a bunch of jerks, right? These are people I didn't know. And they weren't members of anything. I just sat in Vegas in a closed conference in a, leaning against an empty stage and just shooting the breeze for 3 hours. It was pretty cool. Very, very cool. So always remember that. The other people in this chat room are real people, and they're just like you. Very, very, very cool stuff. So you're not alone. So thank you for being part of the community. All right, so let's see if we can make anything out of this mess. Even on a daily, this is a disaster. This proves, or should prove, that you must maintain a bias. Okay? Okay? With the bias, you know if you're a bull or a bear. Okay? You know bullishness that, okay, we have a bottom, but here's the thing. In an area that we were looking for a bottom anyways, right? That's where bottoms live. This is the monthly pivot profit zone. And you could buy here, you could buy the bottom, or in the near future, you might get another opportunity like this. And it's part of range trading. So we have this as an upper range, and we have this as sort of an inside range, okay? And now we may even be topping out on that. But the idea is, in a range-bound market, bulls prefer to buy at support, and bears prefer to sell at resistance. So you got to wait, like you don't know where the resistance is, okay? But that's what technical analysis is for. So on a weekly basis, just to confirm this is the sell zone, okay? And this is the highest one. This is the one you want, okay? So it just might be that's a sell zone here because, well, we got the psychological level of 120. It is the WM3, which is the best selling pivot for bears there is, right? So if you maintain your bias, as a bull, you can anticipate where bottoms are going to be. I think as a bull, you would anticipate that there's potential for this. Not that it will, but just based on the monthly support, you could say, well, if it consolidates here like it did, look at this, guys. It was like a day and a half. And then when it did it again, look, there's no fear of missing out. Look, it took a day and a half to turn. So in the next 36 hours, there might be a turn to the upside in which a bull might consider buying. Okay? And bears already did exactly what bears are supposed to do. I think they would have liked to have sold it a little higher, but it opened on the WM3. What are you going to do? I mean, that's just a weekly sell zone, right? Now, if you don't have a bias, I think you would have been chasing this all the way and maybe made money there, but then lost money here. And then what did you do? Then you maybe bought it here and then gave it back because you thought it was going to go up here. And you're all over the place versus a bull would do this, a bull would do this, and a bull would do this, right? A bear, a bear would have liked a little bit higher, and this is bearish. And, well, the next thing what a bear really wants is lower low, lower high, and have a breakout to the downside. That would be really what bears want. But market conditions right now suggest that that likely would happen, but doesn't guarantee it. So this bear should have their stop jammed by now. Does that make sense? Raj, we covered that right off the bat. I think that was the first thing we did today, Raj. Okay. Oh, trading halted, limit down. Cool. So we can look at and see if the currency market's going along with it. So now I have 900 pips on my Swiss franc, 850 on my other Swiss franc, okay? And 750 on my yen. So I think I just made, what was that, 150 pips on my 2 Swiss franc trades? So that means this is going in the direction of risk off. But do you understand, like, when we're talking about, what do we do now and stuff? Everything's dangerous because it's so late. That's why you were supposed to be doing this weeks ago and months ago. Okay? And now you could say you feel a lot more confident getting into trades because you're already up and profitable, and you can take new shots, right? Kind of trading the bank's money. Wow, this is really going ape crazy today. It's not really working out. Gee whiz. There we go. So let's take a look at, oh, well, I guess I got this Aussie yen. Take a look at that. Okay, so here's my stop loss. Would you recommend that I can move it closer? Well, I can certainly bring it down and place it at this top. So I will lock in 400 pips for sure. Now, I could also play this line, right? But see, this is just a day trade. So really right now I have my stop just above Friday's day trade. Okay? And there's, or is that today's? That's actually today's day trade, right? Yeah, so I want to keep it above today's day trade for sure. How much did I lock in? That's 87 some change. So there's 600, 500. Okay. All right. Just because it's so many pips, I'm out. So here's the logic. This is what's next, correct? That's tomorrow's trade. Okay. So I suppose I could move it up here. Yeah, let me lock in another 100 pips. Don't you love just saying that? Isn't that a wonderful sound? Let me just lock in another 100 pips. So this will get me, all right, so that's 600. All right. That's pretty reasonable. It's a little close. I'll even move it just up a little bit. But for all intents and purposes, that's 600 pips, worst case scenario. Okay. And now let's go look at those Swissy trades. Go back and do that. And then I think we'll call it a day if you want. Hey, if you're new, would you like to subscribe, please? That way when I start tomorrow's webinar, you'll be invited. So, yeah, I'm being conservative on this one as well. So we'll leave it there. But right now, I'm up 900. I got to move this. Why is this bitchy today? There we go. So one of them is 900 pips. The other one is 850. Cool. So I could move this and lock it in, but it's not a big deal. So this is what, 1,500 pips locked in. So I'm going to let this run a little bit. And the next interesting point will be our projected low for the week. And that's way down at 54. So I can make a 200 pips more per trade. So there's another pretty reasonable 400 pips left in this move. Does that make sense? So, like I said yesterday. By the way, did anyone follow up on Ernest Shackleton? Did anyone follow up on that? I don't think I made a clear pitch. It started raining on me when I was talking about it. But Ernest Shackleton was in a very disastrous moment. He was captain of the Endurance, and they get locked up in the ice. And his crew, they're not professional sailors. I mean, some are, but most of them are scientists, right? And cooks and carpenters and stuff. And their job was they're going to like cross the South Pole. Well, they get locked into the pack ice and they're stuck in the boat for like weeks. And then the boat starts to fail, which is not a good feeling, by the way. So they get out of the boat, and meanwhile, he's keeping people on task, doing their jobs, sweeping the deck, doing whatever, their daily routine. Everyone had daily responsibilities. Okay? Well, Baby G, I actually read his actual captain's log and stuff like that. So reading it is even better probably than the documentary, but I'll have to look that one up. But anyway, so they get off the boat and they take off all the supplies because the ship's hull is losing its integrity. And so they build like a little town, because it's all their supplies. And then one day the ship actually breaks up into pieces and it's gone. Now they actually don't have a ship. So now they decide, well, if they walk a few hundred miles carrying all their supplies, maybe they won't freeze and starve to death. Okay? So anyways, they walk hundreds of miles and they're freezing to death and their starvation's kicking in, exhaustion's kicking in, even scurvy. And they finally get somewhere else where they realize the only supplies that were at this new location were basically a bunch of empty rowboats. So they decided to cross the stormiest, coldest, worst weather, worst water piece of ocean on Earth in rowboats. So they load up. By the way, they're starving to death. Some of them are so sick that they can't even leave. So they set up a makeshift shelter made out of one of the boats. They flip the boat upside down and they stick them under there, right? And they spend like 2 or 3 weeks at sea in a rowboat with swells that are 30 feet high and it's snowing. It's below zero. And they finally get to an island, right? But they land on the wrong side of the island and they realize that the town with the hospital and the food and the support and the supplies are on the other side of a mountain range. So now, starving and frostbitten and dying, they hike like another 150 miles over a mountain range. And this whole ordeal was, 6 months or something that they survived out on their own on the ice and crossing the sea and everything. And every one of those men survived. And he says the number one most important thing of surviving that was everyone stuck to their responsibilities. Everyone had their daily responsibilities and regiment. And if that meant sweeping the tent, they didn't even have tents, but you know what I mean? Like no matter how meaningless and menial, you had your responsibility, and you had your jobs, and you had to do them no matter what, and you never broke rank. And they all survived because they did their job. They didn't freak out and panic. So that's what I was trying to say yesterday. Now's not the time to freak out and panic. That's what most people do, and most people die. In this case, most people blow up their trading account. Most people go broke. Most people chase price. Most people are still trying to get rich quick. Most people are making all the lame-ass mistakes that we've all made, but they're doing it on top of the duress of volatility. Instead, I asked you in yesterday's video to become the trader you've always wanted to become. You've been training for years to put together trade plans and having the strength and the discipline to carry out. Just do your job. And so Ernest Shackleton was one of those guys I always think about. What should I do when I feel like it's the end of the world and I should be panicking? Get it done. That's all, right? Get it done. Plan it out. Take the trades, manage the risk. And if you don't have it, if you're just logging in now and you're like, hey, what am I going to do today? What's going on the 5-minute chart? What should I be doing on a 15-minute chart? You're way too late, bro. This is what you were supposed to be doing 12 hours ago. If you had done it 12 hours ago, easy peasy lemon squeezy. Okay? So right now you should be planning out what you're going to be doing tomorrow. Okay? What's going down tomorrow? And you could look at it like, okay. So tomorrow, lower low, lower high, lower low. Okay. Okay. By the way, I hope you like these little trend lines and stuff. I don't know if they're helpful to you or not. It's all automatically drawn. Okay. So you can see someone is already front running tomorrow's price. Okay. That's price action versus swing. Okay. Often what I see is you see this and then this and then this and this. Okay. Okay. So anyways, peace on earth. May the pips be with you. May your profits be above average. Please leave a comment on today's video. Also, please take the opportunity to subscribe and become part of the Forex.Today community. And I will see you tomorrow. I will see you on Wednesday. I will see you on Thursday. I will see the swing trading group on Thursday. And then I will also see everybody here on Friday. So I'm here for you. This community is here for you. Don't freak out. Do your job. Don't crack under the stress. Be the trader that you've been training to be. Now's your time to step up. And remember, you're not doing it alone. You have all of us, including me, here to help you and keep you on the righteous path. So peace on earth. May the pips be with you. May our profits be above average.